Hi folks, today I got my first month statement from my brokerage company Fidelity. Overall, I made a 10% return on my investment in 1 month from trading stock options using the strategies from my iPhone app. It is quite exciting to see that I am on the right track and I'm in the right track on the next phase in my career. The question is, with all the recent market mayhem that characterized the past week of trading, am I going to be able to sustain the performance? To increase the odds of success, I have made several improvements to my app and I'm happy to share those with you in this short video. First of all, I changed the name of my app to NonoTrader. In my opinion, this is trading in nanoscale on two fronts. Trading decisions like these are usually made by professional traders using 2 or 3 29-inch monitors. This app makes it possible to do it on a 5.5-inch phone screen. The second reason for me choosing this name is that dealing with options itself is trading at a nanoscale when compared to trading the actual stocks themselves. Hence introducing the NonoTrader. Now for some cosmetic changes at the title bar of each tab. I'm now using segmented controls instead of page controls, which is way more convenient to tap on. On the options tab, I have also added a portfolio performance summaries for the options that are on the watch list. As you can see, my overall portfolio currently is down $657. Next to each stock, I can also see the summary for options traded for that particular stock. This way, I can quickly see which positions I can cash out as well as which positions I need to take some corrective action on. And when I expand each stock, the same details as before, which show the performance of each particular position since opening the same. Now diving into today's trading scenario, as I mentioned last time, today I'm going to describe how to trade a scenario when the stock is expected to move sideways for the next few weeks. The equity I'm going to use for my example is Lululemon Athletica with ticker symbol Lulu. We can see from the stock summary that their fiscal year is March to February, which means they are still in the middle of their fourth quarter. It shows March 27th as the expected earnings date. So we have a solid 4 to 5 weeks before any major news that could affect the stock price is expected. Let's tap the dashboard button and take a look at the charts for Lulu. There are two charts here. Both charts have time on the x-axis. The top chart has 4 individual plots. The vertical bars are candlesticks for this daily stock price, plotting the opening, closing, day high and day low for the stock price. The purple line is the 10-day moving average of the closing price and the green line is the 25-day moving average of the closing price. The two gray lines form what traders call as the Bollinger Band. They are 2 standard deviations above and below the 25-day moving average. They are used to identify breakout trends when the stock price closes at or above the Bollinger Band and consistently stays above the green line. This denotes an uptrend. It is already identified by the green zone. It is already identified by the app and shows as a green zone starting somewhere around December 7th and lasting a full month. Now let's switch our attention to the bottom chart. This is called the MACD indicator, which stands for Moving Average Convergence Divergence. It consists of 2 lines and a histogram. The black line is called the MACD. It is a difference between the 12-day and 26-day exponential moving average for each day. The red line is called the signal line and it is a 9-day simple moving average of the MACD. The histogram is a difference between the MACD line and signal line values for each day. This graph is an indicator of the momentum behind the trend. When the MACD line crosses the signal line and stays above, it indicates a buy signal. The green zone on the chart indicates a period when the momentum indicates a buy signal, and it shows that the buy signal started and it kept increasing throughout the green zone. So if both the graphs are in the green zone, it means the trend is upwards and the momentum is strong. Combined together, they indicate that the prices are going to go up. This is the buy low situation for the stock and a good time to enter a long position. Similarly, when the momentum is slowing, the black MACD line falls below the red signal line, and in the graph that is marked by the red zone. This is an indication that the momentum is slowing or reversing, which means the price has peaked, and therefore this is a good time to exit the position, cashing out on the gains. Thus, the two charts together can be used to determine the trend and timing for the stock, for entering a trading position on the stock. Looking further for today's scenario, which is neutral territory, from the top charts, we can see that the Bollinger Bands have narrowed down significantly and the stock is just trading around the 25-day average in the last 2 weeks. As we saw earlier, the quarter does not end until the end of the month, and a week or two before the action begins, when the estimates start coming, and then finally culminating in the earnings announcement on March 27th. So I can conclude that at least for the next 3 to 4 weeks, this stock is likely to trade sideways, and therefore I can prepare my option strategy. I now come over to the option central, find Lulu, and then click the experiment button. First, I'm going to select my current position as none. Next, I change the protection to sideways. The strategy I get the best risk reward profile is called the short straddle. It consists of selling a February 23rd call and a February 23rd put, both at the strike price of $77, which is where the stock is currently trading. The expectation is that the stock is going to stay at the same level till the end of February, and therefore both my short options expire worthless and I get to keep the $297 I got credited from this trade. And as before, you can double, triple, quadruple or quintuple the number of options sold to multiply your reward. This is the end of my video demonstration. In the next video, I shall demonstrate a trading scenario where you expect the stock price is going to move in some unknown direction, that is either significantly up or down before an earnings call, and how would you prepare to trade such a scenario.